Hello, everyone. So, unfortunately, we still have a bunch of nothing really going on in the market. So, let's just go ahead and quickly run through everything. All right. So, number one, let's go ahead and start with Nvidia. Nvidia is starting to crack below this very, very important trend line that we've been monitoring. So, see, many times in history, this trend line has acted as a strong level of support and resistance for a very long time. So, we can see that we have now closed comfortably below that. And now we're getting close to the level at 460 that I was saying was going to be a major flat level of support resistance. So if Nvidia breaks below 450, 460, sorry, then that is really going to show some. And as we can see, AMD is also showing some weakness. SMH also showing some weakness. And we can also quickly take a look at the rest of the large tech stocks as well. Not so much Apple, but Microsoft showed a bit of downside move intraday. Then Google had a big move to the downside intraday. Amazon really showed some weakness, then bounced into the end of the day as well. Meta is not doing too well, but it's holding above 326. So basically what I'm trying to show is a lot of these stocks are not climbing like indefinitely the way that they were prior. Like they're starting to pull back a bit. And that's very important because the biggest winners of this entire rally were the AI chip related stocks and tech. So if tech starts to pull back a bit, then that gives a really interesting, that puts a really interesting scenario into the next few weeks. So you could also take a look at Netflix. Netflix is also bouncing, pulling back a bit. So the VIX is continuing to hold, and it's just making higher lows here. So it's just continuing to trek on up. And we know that the VIX is important to look at because it has an inverse relationship to the market. If the VIX is rising, then the overall market should be falling. And as you can see, we're doing, we're rising here. The slower MACD line that we were also monitoring is still climbing as well, which shows that momentum is starting to be bullish on the VIX. So that's not an immediate reason to be extremely bearish on the market, but it is a sign. The second two important things now are the dollar. You can see that the dollar is also starting to break out of the falling wedge. And obviously, this also has an inverse relationship to the market. If the dollar generally, this is what's supposed to happen, the dollar, when it rises, it's bearish for the market. So what we're seeing right now is the dollar starting to really show some strength and climb out of this falling wedge that we've been monitoring. So this is not the most bullish scenario for the overall market. The other thing is the yields. So the yields are also holding support and bouncing a bit as well. Also has an inverse relationship to the market and also in a falling wedge. So now it just begs the question. With these bearish things occurring on the dollar, VIX, and the yields, right? With the tech stocks starting to pull back a bit, the market in general is still pragmatically, what's going on with the market is we're still holding decently well at the tops, at these levels of resistance, and we're bouncing off of the lows. And when you take a look at the SPX, we have closed above this important trend line on the SPX. So this trend line, as a refresher, we took this from back at the highs of January 4th, 2022, right? All the way to the highs of July 27th. And now here we are. So you can see that we just closed back above this level. And this is really interesting. So is this going to hold? Are we going to continue? That is now the question. So back by here. So immediately what is going on is what can we look for now? The easiest thing is we need to see if we can break back above 458.50. If that ends up happening, then there's a good chance we could hit 460 and then 462. And up here, many people will be newly bullish. And all of the people that tried to go short over here will be burnt and will be looking to either cover their shorts or start to newly take into new momentum. And from here, that's where things can really become interesting for puts. But at the moment, all right, so that's the short-term bullish case that ends up being bearish. The other case is if we end up breaking below 452, 450, those are the two main levels of support thus far. So if we can break below those two levels, then we're back to 448 territory, 445 territory. But you know, the way that we've been holding up, like how many days that we've been at these levels? So we closed Monday, November 20th, and it's now almost December. So it's been 10 days. It's been 1, 2, 3, 4, 5, 6, 8 trading days that we've been like this. And tomorrow could be another day just like this. But before I continue about that, what we need to look at is the Bollinger Bands. So the Bollinger Bands are starting to point lower. The upper Bollinger Bands are starting to point lower, which means that there's not that much more downside, right? Algorithmically. Same concept for the NASDAQ. You can see that the NASDAQ's Bollinger Bands are pointing lower. So they're trying to put a cap on the upside movement, especially as we're very close to the highs here, which is interesting. And it's different on the IWM because, you know, the IWM caught up a bit late on the move earlier this month. So the Bollinger Bands are flatter on the IWM. So regardless, now it does look like we started to fill this doji that we ended up having yesterday on the IWM. And now it's just a matter of, are we going to continue to fill all this entire way to 181.75's high? I don't know if that can be the case because 180 is a major level of resistance on the IWM. We had a pretty green day. Tomorrow could end up being green again. We see a lot of bullish flow for the IWM, and that could end up bouncing to the highs tomorrow, especially given the fact that we have Powell speaking tomorrow twice. All right, so we have him speaking at 11 a.m. and then we have him. Sorry about that. So 11 a.m. he's speaking, and then again at 2 p.m. So this is definitely going to cause some movement in the market. But yeah, overall, we're gonna have to see how all of these things play out. The main things that I am looking at are going to be tech and how the dollar and the yields respond now. So of course the VIX. So if the VIX, the dollar, and the yields continue to skyrocket, then the market has to start giving pulling back a bit, in my opinion. And the other really interesting thing that we have to take into account is crude oil is basically taking a hit. Crude oil is not doing too well. And with unemployment starting to creep up and crude oil not doing so well, that is not the best sign for the market in general. Okay? So now the other thing that we have to take into consideration is that China has a respiratory outbreak. For the past few days, they've been reporting cases. And most recently, we also have cases appearing in Ohio. So this is obviously not, obviously this sucks to see, especially since it's affecting kids so strongly. But this is not a really bullish sign for the market. And crude oil is also taking a hit based off of this news potentially as well, because if we end up having another, lockdown situation and everything, then crude oil price is going to take a hit because there's not going to be as much demand for gas and oil, right? So yeah, that's really it. So yeah, I hope you guys enjoyed the video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.